Call to order the meeting of the Audits and Risk Management Committee. Can we have a roll call, please?
Yes. Ms. Yee?
Here.
For State Treasurer, Mr. Boykin?
Here.
For Director of Finance, Ms. Ortega?
Here.
And Ms. Higa?
Here.
Chairperson Rosenstiel, you have a quorum.
Thank you. So the first item on the agenda is the approval of the committee agenda. All in favor? Aye. Opposed? Great. The second item is the approval of the minutes of our September 2nd committee meeting, open session.
Move approval of the minutes.
Second.
All in favor?
Aye.
Opposed? Passes. Thank you. So now we'll go on to the meat of the meeting, which is the discussion of the our audited financial statements. So I'm not sure if I'm turning this over to Robin, to Larry, to Brenda, but
I'll take
to this
one second,
esteemed
just kind
panel
of
in front
kick
of
it
us.
off for us.
Thank you.
Sure. So annually, CalSTRS is required to have an audit of its financial statements, and Crowe Harworth LLP continues to be our external financial statement auditor and has performed an audit of our financial statements for fiscal year 2014-15. And these statements are prepared by management. They are the responsibility of management, and the auditors review those statements. They audit the statements to make sure that they're fairly presented, and they express an opinion on those statements. And so we have a team with us here today from Crowe, and Brenda Torres is our managing partner, and I'll turn the time over to her to introduce the team and to have a discussion about each of the items that they'll be presenting today. As we review these items, we will pause just for a moment and ask for the committee's acceptance of each of the items that are presented, okay? Thank you, Brenda.
Thank you, Larry. Certainly appreciate that. Good morning, Chairman Rosenstiel and members of the Audits and Risk Management Committee. It is certainly a pleasure to be here with all of you this morning. I told some members of management this morning this is always like a bit of a holiday for Crowe. I look forward to this day and an opportunity to present our results to all of you. We have a presentation prepared, so we'll go through that. I'll share a little bit about our team, those that are not here with us today, as well as those that are present. And we'll go through the deliverables, as Larry said. First and foremost, I do want to recognize management and the efforts that they put forth in preparation of the various audits that we performed. This was our 5th year that we were engaged to perform these services, and each year I think the audit runs more smoothly. And that is a big testament to management, as well as the organization and how they've responded to past comments that we've given throughout the audit process. Next slide, please. Oh, I have a clicker. I apologize. Well, I want somebody to click for me. I'm kidding. So we're going to talk about the scope of the audit engagements. I think Larry did a really good job of framing that up about what our responsibilities are and management's responsibilities, but I'm going to cover that as well. We're also going to talk about the deliverables primarily related to the financial statement audit of CalSTRS. Those items are noted up here, and then we will allow for questions and discussion. Excuse me. Although that's the last item on the agenda, I would encourage all of you that as you have questions as we make our presentation, please interrupt or let us know that you have a question and we want to address those timely. Before we get into who's here with us today, I do want to mention some members of our team that are not with us. We have been very, very fortunate to have consistent members of our leadership team serving CalSTRS. Chris Moore, many of you remember, so Chris is still very much a part of the engagement as the partner really leading the investments portion of the audit, and Chris specializes in investment valuation. Craig Sullivan is our IT risk partner, so he works with Ashish and his team as it relates to the financially significant systems supporting the financial reporting. We also have a concurring partner and our assurance professional practice, which also known as our national office, that are a part of the engagement. We also use a number of senior managers and managers that have developed really good relationships with management. We kind of segregate the audit very much like you're segregated, or CalSTRS is segregated by business unit. So Mike Van Dyne and Dan O'Malley primarily serve the investments portion of the audit. Ron Gasink has been heading up our employer audits, which we really took a different approach last year due to the implementation of GASB 67. And then I will let Alexis introduce herself in just a minute. And Alexis is really the overall project manager. She is the one that keeps management on track. She keeps us on track and does a really good job doing that. So I just make sure it's important that you understand who's serving you. As Larry said, Brenda Torres, I've been the signing partner on this engagement for a number of years, and it's certainly been a pleasure to serve in that role. And Kevin, I'll pass it over to you.
Kevin Smith, I'm in charge of our national government audit practice. I work for both Alexis and Brenda on this engagement, and this will be my 5th year as well.
Alexis Fitzpatrick, Senior Manager in the Sacramento office here, and I specialize in a variety of industries, including financial institutions, benefit plans. I've been on CalSTRS for the last 3 years. Glad to be here, so thank you.
So we want to talk a little bit about the scope of the audit engagements. And as Larry mentioned, we are CalSTRS external auditor. We audit CalSTRS, and we did this year for the year ended June 30th, 2015. Management is actually going to present the financial statements to you in more detail tomorrow. I think Art Martinez is going to handle that presentation, so we're certainly not going to go through any of the detail, but we will talk about the opinion that we issued relative to the scope of those services. I do also want to mention the other pension information. If all of you recall from last year, the scope of our work really expanded. It's a byproduct of the audit of CalSTRS, but really focuses on key information as it relates to the state teachers' retirement plan due to GASB 67 and then primarily GASB 68 for the employer. So these audits are really to assist all of the employers in their implementation of GASB 68 this year, and then their continued documentation and ability to record their entries on a go-forward basis. So with that, we did audit the scheduled proportionate share of contributions for a non-employer contributing entity and the employers. And in addition to that, then we also audit the schedule of aggregate pension amounts. So that really includes a separate audit opinion on the total net pension liability as of June 30th, 2014, the total net pension liability as of June 30th, 2015, and then the total deferred outflows of resources and total deferred inflows of resources. We are not going to present that information to you today. That will be presented to you in February at the next meeting. But I did want to let you know that there are 5 different opinions that get issued. And we issued, unmodified opinions on each of those deliverables. Any questions on that before I move forward? Okay. All right, so I want to talk about the independent auditor's report. If you could refer in your materials to page ARM 11, which is where we have our independent auditor's report. And I'm certainly not going to read this to you, but I do want to highlight some things that are very critical for you to understand in your particular role. On ARM 11, it talks about management's responsibility for the financial statements, and Larry did a really good job of teeing this up. But management is responsible for the preparation and fair presentation of these statements. And they're actually in accordance with accounting principles generally accepted in the United States. And they need to design their internal controls to make sure those financial statements are free of material misstatement, whether due to fraud or to error. So that's management's responsibility. Our responsibility then is to express an opinion on those financial statements. So we certainly go through a risk assessment. We are required to understand the internal controls relative to plan our engagement, but we are not offering or issuing an opinion on the internal controls relative to CalSTRS and the system. If you want to turn to ARM 12, the first paragraph is our opinion, and that is an unmodified opinion, and that is consistent with each of the opinions that we've issued over the last 5 years. We've issued unmodified opinions. Right below that, we have 2 emphasis of matters paragraphs. So the emphasis of matters are really items that we think are of significance to all of you as well as to the readers of the financial statements. And so we highlight those each year. They're also consistent with the previous years. The first one talks about the magnitude of the net pension liability, and that being the $67.3 billion. And we have not modified our opinion with respect to that matter. And then in addition to that, we also need to emphasize the fair value of investments that has been estimated by the general partners and investment advisors and reviewed and approved by management in the absence of readily ascertainable market values, and that's $53.1 billion. So the significance of that is, again, letting the readers know of the financial statements, the portion of the investment portfolio that doesn't have what I'll use the term observable inputs used to determine fair value. So there's a lot of subjectivity as it goes into those values. The other matters really cover the summarized comparative information. So that's the 2014 information that's included in the annual financial statements. The required supplementary information, that information is actually unaudited. We perform enough procedures to make sure it's consistent with the annual financial statements. And then if you turn over to ARM 13, the supplementary information is subjected to our audit procedures, and we make sure that that is fairly stated in all material specs as it relates to financial statements as a whole. And then we also issue another report that's required under government auditing standards that we'll cover later today.
No, I just would like to understand a little bit more the emphasis of matters. So those are pointing out. I understand the one with respect to fair value of investments. My understanding is you're saying there's about $53 billion that doesn't have, as you put it, observable inputs. But there's nothing in that. There's nothing about that suggests to you that the financial statements don't provide an accurate picture of our financial situation.
Absolutely,
Is that right?
that is correct. And our opinion is not modified for any of those emphasis of matters paragraphs.
But the net pension liability, I'm not sure I understand. Are you saying that you have no reason to think that the $67.3 billion isn't an accurate number? Is that what you're saying there?
Oh, no, not at all. I think what we want the reader of the financial statements to understand is, I look at the total pension liability as a significant estimate. So it's determined by the actuaries. There are definitely some key assumptions that are used to determine the total pension liability. And then just the significance of the net pension liability when you look at the overall net position of the strip in relation to that total pension liability. So we just feel like those two amounts, we want to bring attention to those particular matters.
Okay.
Chairman, I would add one other point related to the emphasis. Kind of due to the unique nature of governmental accounting or plan reporting, you have a $198 billion net position. Very limited liabilities appear upon the strip's financial statements. So this is just, again, alerting the reader that it's not just $198 billion of a pot of money. There is a $67 billion unfunded liability.
Which isn't on our balance
Exactly.
sheet.
Right.
And I see. Okay. Thank you. Thank you.
Any other questions as it relates to our report or the financial statements that you would like us to address at this time? Okay.
If not, then we do have board action on this item. And so we are recommending under item 3A, page 8 of the ARM, that the committee accept the independent auditor's report for CalSTR's financial statements for the year ended June 30th, 15. And attachment 2 has a resolution with regards to acceptance of the report.
So, can I hear a motion to accept? Okay, we have a motion and a second. All in favor, say aye. Aye. Oh, I'm sorry. I didn't notice. Sorry, Betty. There you go.
Great, thank you. Thank you, Mr. Chairman. And thank you for the presentation. I just had a couple questions, and one is, obviously, a lot of new GASB rules are coming into play, and really appreciate the articulation of what they are, and it's a great reference in terms of going forward, just being sure that we're in compliance. The issue about how we reflect, I guess, our own, CalSTRS as an employer, our own pension obligations. Can you just speak a little bit about that in terms of how that will get reflected, because it's not, incorporated here at this point, so.
You want me to?
You can go ahead and.
Okay. So we did make an entry to reflect our portion of the unfunded liability for the, our staff. So we're a shared states liability. So as a subordinate component unit, we got an allocation from the state controller's office. Thank you. And we compared that to our own calculation. We actually booked an entry based on that. What we decided to do in policy, and so we've documented this as a policy for CalSTRS, is that because of the confusion that we thought it would cause the reader to add disclosures under GASB 68 for ourselves, and the nature of that liability as a proportion of our financial position, we decided not to do the disclosures. So we made the entries, we booked the expense, recorded the liability, but we didn't do the additional note disclosures because we felt it would be confusing to the reader and wouldn't provide clarity, but perhaps distort what the reader was looking for. So that was a management policy decision that we obviously had communication with our auditors about, but that's how we decided to approach it.
And I just want to be sure that we were ourselves in compliance with that.
Yeah, and I wanted to also add on that we were in agreement with management's approach. So as Robin just stated, we did discuss that and certainly determined that overall amount would be immaterial to CalSTRS financial statements, and appreciated their position about the confusion and were supportive as to how they addressed it or lack thereof with respect to the footnote disclosures.
So
You're welcome.
I'm actually looking at the statement, so I apologize for not having the ARM page number, but if you look at ARM page 27, maybe 28, so you'll see that we now have entries for deferred inflows and outflows of resources. Those are as a result, those are just new line items on our balance sheet as a result of those entries we made for GASB 68. We also made an adjustment to the beginning balance for this year, again, to reflect the entries that we had to record. So, and we've got explanatory notes throughout our financial statements, and we worked hard to make those clear, especially in terms of the comparables to the prior year. So I really appreciate the advice that we got from Crow in terms of how to disclose appropriately in terms of those adjustments, but not confuse the reader.
Thank you.
Betty, do you have more questions?
Yeah, that's it.
Okay.
Yeah.
Um,
The motion.
Does anybody else have questions? I have one question going back to ARM 18. So there's a discussion about the CalSTRS return, and there's reference to the 4.8%, which our investment staff has calculated as the return, in which we've reported. But there's another number in here, and I'm trying to understand not so much what the difference is, but why that's in there. Why are we why is the 4.8% that the staff reports not sufficient?
Well, thank you for asking, Chairperson Rosensteel. This is a new requirement from GASB. As a part of GASB 67, we are to provide the money-weighted rate of return. So it's calculated on a different methodology, but is required under GASB 67. So we actually have a 10-year schedule requirement that we're building that's included in the required supplemental information. But we wanted to make sure we addressed it in the MD&A so that people would understand that we knew there were differences, and the differences were due to the differences in calculation methodology. The 4.8% is what we published as our gross return at the end of the fiscal year, and so we wanted to acknowledge that because that actually relates to those publications and is appropriate for the MD&A, the Management Discussion and Analysis. But the 4.1%, which is calculated as a money weighted return net of fees, is required under our disclosure requirements. So again, we put them together to demonstrate to the reader that we understood that they were there and different and why.
And the 10-year schedule, what does that mean? That over 10 years we're going to
We actually are required to present, and again, pardon me, I didn't have this flagged. So it is a schedule, it is our Schedule 4, which is on ARM 65.
Is that right?
Yeah, looks like it. And it shows it's a schedule of money weighted returns that are required for disclosure under GASB 67, and we're building that schedule for 10 years. GASB asked that we implement it retrospectively, but we didn't have the information, and that was optional. So we are now building it over time. So you see the number for 2014 and 2015, and it will go subsequently up through 2000 and up.
So I may have asked this question last year and just forgotten the
It's
answer.
okay. Yeah, no. So again, the purpose of saying that in the MD&A is to bring it to people's attention that there are different calculation methods and that the methods generate different numbers because they mean different things.
Okay.
One reflects the impact of cash flows and one does not, and there are also differences in how the fees are interpreted in those calculations.
Thank you.
You're welcome.
I don't see any other questions. We do have a motion and a second, so I think it's time to call for a vote. All in favor of accepting the financial statements? Aye. Opposed? Great, thank you. So give it back, Larry or Brenda.
Yeah, Alexis is going to cover the next part. I would direct your attention to ARM 79 in your materials, and I'm going to turn it over to Alexis.
Thank you, Brenda. On ARM 79 is our required communication to those charged with governance. On the following letter, this is a standard letter that we provide to you every year. This year, this letter just covers the audit of CalSTRS. Unlike last year, this letter covered both the OPI and CalSTRS, so I just wanted to note that. On the top portion of the letter, on ARM 79, it goes over auditors' responsibility under both generally accepted auditing standards and our responsibility over government auditing standards. And on the bottom half, it'll discuss the plan, scope, and timing of the audit. This was discussed with you in greater detail on February 4th when we met with the committee. Moving to page ARM 80, I did want to highlight two significant things. The two critical accounting estimates that we continue to report on and what we just briefly discussed. The net pension liability of employers and non-employer contributing entity, which is Note 3 to the system's financial statements, as well as the fair value of investments, so Note 5 to the system's financial statements. So because of these significant estimates that are included, that's why they are also included on the opinion, which we just went over. On page ARM 81, this discusses the new accounting standards and the impact on the system's financial statements upon adoption. You'll see there's quite a few that are going to be implemented for fiscal year June 30, 2016. I'll go over them briefly, highlighting probably the most important one, which will be GASB 72. But GASB 74 at the top of the page is effective, like I said, June 15th, 2016, so this year. And management is currently evaluating the impact that the exposure draft would have on just the Medicare premium payment program. That's the only program that would be in effect. GASB statement number 73 is effective for financial statements for fiscal years beginning after June 15, 2016. However, will likely not have an impact on the system. So this is not one that management thinks will have an impact. Now, GASB 72 is the big one this year. It is effective for the plan ended June 30th, 2016. So for this next fiscal year end audit, will be a large impact both on management and on our audit procedures. Primarily, Statement 72 expands the use of fair value measurement to nearly all investments and makes it more in line with FASB Topic 820 fair value measurements. So it's what we're seeing in the FASB world. This is now going to be applicable to governmental accounting. The statement covers both measurement and application. It defines an investment as a security or other asset that a government holds primarily for the purpose of income or profit and with a present service capacity that is based solely on its ability to generate cash or to be sold to generate cash. It also defines the fair value. So it defines fair value as the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. So essentially that's the exit price. Along with establishing the fair value, it also establishes a hierarchy. And now there'll be a requirement, well, it'll be reporting on a fair value hierarchy of level 1, level 2, and level 3. And within this hierarchy, investments will be classified there based off their observable or unobservable inputs that are gone into determining that fair value. So for an example, a level 1 investment would be stocks that are traded on the daily. So they're unadjusted, quoted prices. The fair market value is easily attainable, and so would be included in the level 1 fair value hierarchy. Now that leveling goes down, so then you have a level 2. Those investments could be similar assets, so not identical, traded daily, or they could be identical assets but not traded on a daily basis. So there's just not a lot of activity out there to determine the fair value. That would be a less observable input, and that asset would be included on the level 2 of that fair value hierarchy. Level 3 is going to be assets that have your most unobservable inputs. So oftentimes those are going to be management's assumptions or estimates that go into determining that fair value. So those hard to value investments oftentimes will go into that level 3, that fair value hierarchy. Along with the fair value hierarchy is a more robust disclosures that's required for 72. So management will also be required to disclose how they determine the fair value for all those investments. Some will be fairly straightforward. So for those investments that are level 1 and are traded daily, but if you have, or if management has level 3 hard to value investments, which they do, and there are assumptions and estimates that go into that, those assumptions and estimates will now be disclosed in the financial statements to support that fair value.
On an investment by investment basis?
They will
Or
be
generalized for the asset class?
asset class or category
Yeah, actually investment type.
okay.
As compared to what we call an asset class, which sometimes includes various types.
Got it.
So it would be based more on the organization under the schedule of investments.
Right.
So that's, kind of the high level of 72, but management does believe it'll be a significant impact on the financial statements.
Yeah, so we're actively planning for this effort and are actually in the procurement process to bring in some assistance to get us going. We did participate in the comment process, the interactive process with GASB around this new standard, and prepared some estimates based on our participation in a field test as to how much effort it was going to take us, and show dramatic emphasis in this first year. That's what we found, that people who had done this under FASB found that the initial establishment of the processes to be compliant were significant, and then as those were in place, that they became routinized, and so the change in their actual workload on an ongoing basis was less significant than in the first year. So we're really thinking about how to get this deployed effectively. It will probably take us 2 years to get through the automation of the process, given the scale of our portfolio and the work that we need to do with the investment area as well as with our custodian and their systems and our systems. But I do want you to know that we have spent a lot of time planning already, have a good idea of our approach, even though it will probably be primarily manual this year. We do have our arms around what we need to do.
Any questions on that? Yes, I see Grant.
Thank you. So are we going to have, in terms of our actuarial evaluation and our accounting, separate, when it comes to our private asset classes, real estate, private equity, are we going to value those differently now with the GASB statements in the way that we account versus in the actuarial valuation?
We actually already do have a difference based on accounting policy, so the implementation of GASB 72 is not going to create a difference. So for financial reporting purposes, we actually do a roll forward from the 90-day lag that we experience in the portfolio valuation. So we roll forward for cash flows. We also have booked an estimate as to changes in the market value so that we are not, we're attempting to true up at 6/30, although we don't have the partner statements in yet. And then we do a comparison as we get close to issuing to make sure that we are within a reasonable estimate.
So following up on Grant's question, and maybe I didn't fully understand the answer, but is this going to affect the way that the investments division values their investments and measures their returns? Or is this something that really is doesn't affect what's going on in investments?
Well, I guess I'm going to answer that by saying that the organization's financial policies can be and are different than our valuation policies from a portfolio basis. We understand those differences, and those are clear in policy in terms of differences. But because of reporting standards, there are differences. So what's typical, what's typical in the market in terms of performance reporting is not necessarily consistent with reporting requirements under GAAP. And so you'll see those differences primarily because as you look at benchmarks for private equity, for example, or real estate, those are 90 days lagged at this point. And we need to report as of the end of the fiscal year, so we roll forward for cash flows, as well as attempting to make an estimate of the change in value over that period of time to report as of the actual date of issuance.
Right, and I understand the differences now.
Right.
I guess what I'm saying is, with the implementation of GASB 72, is there anything in the implementation of GASB 72 that will be reflected in or cause a change in or have an input into what the investment staff is doing and how they're measuring their performance? Or are we still completely separate?
I'm looking at Deborah because
Okay.
I don't want to speak for
Good,
investment.
that's great. Thank you. Welcome, Deborah.
For the record, Deborah Smith, Chief Operating Investment Officer. What Robin is explaining is that for our private assets, when you receive our valuations and returns as of June 30th, for example, for private equity, that is your March 31st value adjusted for cash flows. Robin's team trues that up for the financials for June 30th. So there is a difference. With respect to GASB 72, it won't change how we're valuing those assets in the investments, but we're going to work really closely with Robin and her team because she's going to need information from our subject matter experts in those private assets in order to determine what those levels are, those level 1s, level 2s, and level 3s. So we're working really closely with her. April Wilcox has a team member that is participating in the RFP because I believe Robin is going to be hiring a consultant to help us implement this GASB 72.
Great. Betty?
I think this is related, but on ARM 84, where you have the uncorrected misstatement around the reflection of the private equity, the $380 million. Is this related to that in terms of the fact that it wasn't, it's not an issue of how it was valued, but really how it's accounted for with respect to?
Yeah, that is correct. So is both Deborah and Robin were explaining about how the portfolio is managed and how the assets or investments are valued as of June 30th. Right. What management did is they actually estimated what they thought fair value should be as of June 30th, 2015. And Robin stated earlier she continues to evaluate the information that is received by the system after they've closed the books to make sure that they're not materially misstated. So as we went through that process as it relates to private equity, they were underestimated by $380 million. So that did exceed a de minimis threshold that we had established for our financial statement audit. And management chose not to book that entry as they felt it was immaterial to the financial statements, and Crow concurred with that. But we need to report that to you. But it's exactly the same topic that we're talking about, which is estimating fair value that's not yet been determined as of 6/30, because it's the 3/31 rolled forward for cash.
So I guess my question is, going forward, I guess, how do we kind of avoid this? I mean, it's just always a little striking when you have uncorrected misstatements, and so, I mean, how do we kind of?
So again, and thank you for the question, Betty. We have a process that we are developing to clarify our estimates. So I am actually very proud of the fact that we made an estimate and that we got as close as we did and didn't have to reopen the books because of the risk associated with trying to redo the financial statements in a day, which is really what it would come down to. And so I don't want to leave you with the impression that there was something wrong with what we did in terms of the integrity of the effort. Yeah. What I can tell you is we will get better at estimating, and the importance in the disclosure is to let you know that we did do an estimate. There are significant estimates, and that our processes are such that we will continue to get better at that estimating, such that we'll close that gap. The challenge is we're using metrics that we don't have a lot of experience with yet, and so we erred. We actually increased the value, but we didn't increase it quite enough. Right. So we were going in the right direction. It's just that we were more conservative than we needed to be in terms of increasing the value of those assets over the time. I do want to clarify, though, for the discussion that because we are already fair valuing our investments, GASB 72 doesn't impact us in the same way it might impact another government who might not have been fair valuing certain kinds of investments. So it's not that it doesn't have requirements in it, it's just that we're already meeting the intention of those requirements in our implementation at CalSTRS already. What it will change is certain disclosures that we have not had to do. So for example, Brenda and Alexis both mentioned the emphasis paragraph around the fair value. Well, that will be clarified in these disclosures because you'll see that those are level 3 investments. So whether or not they'll need an emphasis paragraph, I think or the tenor of that paragraph may change because we will have done that disclosure in a very specific way under the GASB guidance in the next year's financial statements.
Good. No, that's a great explanation. Thank you.
Any other comments from board members? Alexis, if you want.
Great. Moving on page ARM 81 is GASB statement number 71, which was adopted, and the adoption of the statement did not have a material impact on the system's net position or changes in net position. We also already discussed briefly GASB statement number 68 and the implementation this year, and that the system did record their proportionate share of the liability, the deferred the deferred inflows of resources and the deferred outflows of resources and expense related to the participation in the Public Employees Retirement Fund, but did not have the detailed note disclosures of the supplementary information. On the second half of page ARM 82, is there significant accounting estimates? Again, I'm not going to go over in detail. They include the fair value of investments, the total pension liability for the strip, and on the top of ARM 83, also included is the actuarial accrued liability for other post-employment for benefits and required contributions. These are no changes from prior years. On the bottom of page ARM 83 is where we go over the corrected and uncorrected misstatements. There were no corrected misstatements. So as you're aware, we audit to a specific threshold, and if we identify as error in the financial statements that are above a threshold, we are required to communicate that with management, and they will usually record an adjustment. There were none. And that there was one uncorrected misstatement that we've already discussed. Other communications we're required to have with you. We reviewed other information included in the system's financial statements, and we noted all the information was consistent. There were no significant difficulties encountered during the audit. There were no disagreements with management. Again, I want to say thank you to management. I'm here most of the year, or at least working on this engagement most of the year, and I do really appreciate all their efforts. There were no consultations with other accountants. Management has provided the letter of representation to us, and that's attached. There were no significant related party findings or issues. And other findings or issues that we find relevant or significant, we will discuss on the report on internal control. I believe Kevin will go over that. And that concludes the letter as far as our report to those charged with governments. If you have any questions.
Just want to say we enjoy working with you too.
Thank you, Robin.
Even though we asked for a hiatus.
You did.
I'm not sure we're going to get it, but
I don't see any questions. Bob, do you have any?
Is there a resolution?
Yeah.
I was just wondering,
Yes, so
Bob, do you have any thoughts, comments?
questions were addressed by the committee.
Okay, good. So then I think we're ready to entertain a motion to accept this.
I would move to adopt the resolution to accept the report to those charged with governance.
Since we've got a motion and a second, all in favor? Aye. Opposed? Great, thank you.